let's talk about one of the big stories of the day, which is Blackstone's acquisition of Air Communities, a multi-family REIT. Joining us, Keith Redding is a Senior Director of Research at Morguard. Keith, I know you guys follow this area very closely. Tell me about what you do in your research and any thoughts on that particular Blackstone acquisition today.
Well, I think, with investors, beds and sheds are the thing these days. They're shying away from office. We've seen some of the fallout in office in terms of low occupancy levels. People are not returning to the office like we would have expected in the past. Hey, beds and sheds are where it's at. So that's industrial and multifamily apartments. The view long term is that apartments will be strong. Americans want to rent accommodation. If they don't or can't afford housing at the moment, particularly with interest rates up a little higher, apartments look like a good deal going forward. And certainly the fundamentals are a little bit weaker over the last little while, but we think the long-term picture is really strong. In terms of the recent acquisition, again, pricing is everything, but certainly from a fundamental standpoint, apartments are a good buy.
What was that deterioration of fundamentals recently? Was that just rates starting to push upward, or is there strain on the consumer that's going to limit the multifamily market?
Well, I think that if you look over the last couple of years, let's go back to the COVID scare. We had a real downturn in the multi-res apartment market, but what we did have was a really quick rebound. If we look, say, a year ago, give or take, we had record high demand for rental apartments. We had double-digit rent growth in some markets, particularly in the Sunbelt regions. So we had record low vacancy, record high rents. Demand was really strong as things bounced back really strongly after our COVID scare. So, we went from record performance. Now we're seeing a little bit of what I would term normalization in the market. We've also seen an influx of new supply. So we saw record new supply in 2023. We're going to see close to that this year. So lots of supply. Demand has sort of leveled off a little bit. And again, I think that's just, you can't have record demand on an ongoing basis. So we saw a little bit of a slowdown. We've seen, as I said, record new supply. Vacancy levels are ticking upward. And so we've seen a little bit of softening of market conditions, particularly rent growth over the last 6 months or so. What do I think is going to happen going forward? I think, again, we'll see a bit more of a normalized market where supply will be a little ahead of demand for the next year or so, but eventually demand will catch up. And then the long-term picture is really strong for apartments.
Is it rate sensitive, Keith, or is there still a lack of supply enough and demand enough that people will just kind of wait in queue for the price to equilibrate as rates go higher?
Yeah, certainly rates have an impact. If you think about it from the renter's standpoint, if I'm looking at maybe purchasing a home or purchasing a condo somewhere, whether it's for income purposes or to actually live in, if interest rates are a little bit higher, it's cutting into my the money that I have in my wallet, so to speak, and so that will impact certainly the purchase market. But what it also does is it forces some renters to stay where they are. And that's obviously to the benefit of owners of rental apartments. But definitely interest rates do have an impact. Again, it may not be directly, particularly on the consumer side. On the builder side and the investor side, definitely has an impact. If you're borrowing money at a higher cost, that's going to impact your bottom line. So, yeah, it will definitely have an impact going forward.
Well, should we expect to see more deals like we saw today from Blackstone? Is there a case to be made that these REITs can be better managed privately? Is that a premium in these stocks now? Should investors be thinking about potential buyouts? I mean, this is a pretty big deal, $10 billion, and Blackstone shares rallied on it.
Yeah, absolutely. I mean, you know, distress breeds opportunity. Not to say this deal was a distressed seller, but certainly in the broader market, you're seeing a little bit of distress with groups that perhaps have stretched themselves a little bit too far. If they've used leverage in the past and they're perhaps struggling a little bit to make those payments, that can definitely breed opportunity for the opportunistic investor who has the funds available and wants to take a bigger position in what has been a pretty secure and stable sector moving forward. So yeah, I'd be looking through the weeds and seeing what I can acquire going forward.
All right, Keith, thanks for the analysis. Appreciate it. Timely discussion.
Thanks, Oliver. Take care.
Absolutely. Keith Redding joining us from Morguard.